All right. Good morning from here, and welcome to yet another training video. If you can see my screen and if you can hear me, I need you to put in a 111 on the chat. If you can hear me and you can see my screen, put in a 111 on the chat. Let me know if you can hear me and you can see my screen. If you can boldly hear me and you can see my screen, I need you to put in a 111 on the chat. Okay, I'm seeing a 111 on the chat. That means you can be boldly heard and screen can also be seen. All right, quickly, we have no less than 30 minutes for this particular section. So basically, if you've been following us, if you've been following the training, if you've not been following the training, also there are recordings you can always fall back to, so you don't be lost and you don't find yourself confused at any of the technical trainings that we've been having. So basically, we have been discussing about price. We've gone from all the way from candlestick introduction. We've done candlestick patterns, candlestick signals, we've done market structure. So currently we're looking at price fluctuation, price movement, the quarter theory. We're analyzing from the quarter theory perspective. And today's section, we will be looking at another very important area in price that we call large quarter correction. That is, I'm putting it up on the chart. We have large quarter correction to deal with today. If you've been following this section, you won't be confused at large quarter correction. Beg your pardon, please. All right. We'll be looking at large quarter correction in today's section. I believe everybody must have been very clear enough on the principles to large quarter, the movement in price from each quarter point to the next, from each quarter point to the next. And we introduced that every price movement begins and ends at a large quarter point. And also we found our way through each large quarter point. We introduced that each large quarter point has equivalent of 250 pips. That is when we divided price from all the way from 1,000, where we analyzed price from 1,000, and we were able to simplify price into 4 equal parts called large quarters. Now, remember that whole numbers, when we have 1,000 in price, that is 1,000 from price, we narrowed that price into what? Into quarter point. All right. So, and when we were on that phase, you can boldly recall that we divided that 1,000 pips of price into 4 equal parts called large quarter point. That is where the name quarter point was derived from, right? And then we gave each of those quarter points a name called what? Large quarter point, right? And then we established a base that each price movement begins at a large quarter point and ends at a large quarter point. In the bid to complete each large quarter point, price has to undergo what? Areas of what? Price retracement or consolidations. Remember that? And then remember also let me take that again. It's very important. Now, remember that we had price, located price from each 1,000 pips. Now, we're using Euro JPY. Now, this is 1500. Okay, let me switch a currency pair so that you understand what what we're doing. So this is a Euro USD. Now remember that I'm just going to do this for the benefit to make sure that everybody is in the same page with me. So we have 800, that's 8,000, I beg your pardon, 8000, right? And then 8000, we can target towards to becoming a whole number. Remember what we did? We made those whole levels green, right? So when we made those levels, we discovered or we identified the next 1,000 pips from this 1,000. So the next 1,000 pips from 800, that's from 8,000, going to be what? It's going to be 9,000. So we just quickly locate next 1,000 pips, which is 9,000, and that is it here. So we locate that. Then this is called a whole number. This is not called a quarter point. These are called whole numbers. So we're not precise enough, but we're 9001, right? So the distance between all these levels is called 1,000 pips range. The distance from this point to this point is called 1,000 pips range. I want everybody to catch all of this. It's important because I have to go over it again. The distance between point A to point B is called 1,000 pips range. But then you can broadly remember that we had this price simplified into 4 equal parts from where we derived our name or the name for large quarter point. All right. So we went further to dividing this 1,000 pips into 4 equal parts. So what did we do? How for us to be able to divide this quarter point into 4 equal parts, we have to first of all get the exact half of 1,000, and the exact half of 1,000 is 500, isn't it? So when we have 8,000 and then a 9,000, that is a 1,000 pip range. The half of 1,000 is simply 8,500. That became our half. We went straight to identify that and made it another color. I will use white. I will decrease the boldness of this horizontal line. So currently now we have been able to split the 1,000 into 2 equal parts. But then being split into 2 equal parts is not the goal. We have an objective to split the price or price fluctuations or price movement into 4 equal parts, which are called large quarter. From here to here is called a quarter point. A whole number, I beg your pardon, is called a whole number zone, right? So splitting it into 4 equal parts simply gives us what? A large quarter point for each. Having done this, we proceed to dividing yet again into 2 equal parts. Now, from 500, that is from 8,500 below 800, we should also yet again split these price levels into 2 equal parts to get a quarter part of it. Remember that a quarter is 1/4 of a whole, right? So when we have an orange and we're asked to divide it into 4 equal parts, it simply share that orange into into 4 different units, that each unit is equal to the other. Each unit is equal to the other. This is the same approach we are doing or we're using for this same explanation. So we have 250 right here, though not precisely at 250, but it is at 251, but I can make that precise also so that you don't get confused. But the major price is what? 250. So we've gotten that exactly at 250. I would make this color another, I'll make it this to give us that color differences. So we've gotten a equal level between this and this. Remember, this is not our concept today. Our concept today is large quarter correction, large quarter point correction. But for us to get to large quarter correction, we have to also remind ourselves of what we've done previously. And this is exactly what we've done previously. So in case you've not been grinded enough in this particular concept, there are recordings for it. You can also go back on it. Make sure you get them clearly. So for us to get the next quarter point of this, we also have to locate a zone that is prominent from this. I will decide to make that the same color. All right, so this becomes a complete large quarters area. Now, each of these levels is now called large quarter point, large quarter point, and large quarter point, and large quarter point. And then we decided to make each of these what a transiting zone of price. Now, remember that all through our section we have established that price begins at a large quarter point and ends at the next large quarter point. It is important to know that. So, if we know that each price movement begins at the large quarter point and ends at the next large quarter point, it is obvious for us to now decide the direction of that price or the trend of that price according to what price is moving or according to the direction of where price is going. Remember that there is no trend with that direction. Everything you do is solely based on trend. It's just being on the right or the positive side or at the advantage side of the market. All right. So if you don't if you've not discovered or yet discovered the trend a particular market is having, it will be difficult to even analyze that market in the first place. So price movement, price direction helps you a lot in doing that. And then we have established this. So this is how we got the name for each of our large quarter points. But then onto this section, we are looking at what? Large quarter point correction. Large quarter point correction, right? So we are concentrated on only a large quarter point movement and not on the what? On the whole large quarter point, right? Not on the whole price, but we're looking at just a fracture of price, right? Just a fracture of price, just movement from this, or movement from this to this, or movement from here to the next, right? So this is what we're doing today. Follow me closely, and we will be done with that in a jiffy. All right. So, although possible in some cases, in most instances, multiple conservative large quarter movement or large quarter transactions and large quarter completions may not be likely to occur at once without any price consolidations. Large quarters equal moves of 500 plus, and such significant price moves are substitutable to large quarter price correction. In periods of large quarter corrections, price remains within the current large quarter pullback for the preceding large quarter. Now, what I'm trying to explain is this. We already understand, we already fully accepted the belief that each price movement begins at the large quarter point and ends at the next large quarter point. So if we believe that a price movement began at this point and its major objective is to complete to the next, all right, and then to the next, and then to the next, and then to the next, continuously, consecutively in that direction, then we have found a base for our truth. If we found the base for our truth, we can now easily narrow with price or flow with price. Now, if we know that each price movement begins at the large quarter point and is going to end at the large quarter point, that is, we have marked that out. But most of the times, price do not successfully complete a large quarter point without a major pullback or consolidations. Just like this, price was moving towards here, but it just don't move to completing that level of price targets, just like this. Before price can complete a particular direction, it goes something like this in an what's going on? Okay, I beg your pardon. Sorry, I beg your pardon. Let me use another. Okay, price will have to undergo some series of retracement, some series of pullbacks, all right, some series of before it finally can complete a a large quarter point. It does not just complete a large quarter point simultaneously although sometimes it happens, but is rare in some cases. Just like in this cases, it happened, right? You saw that price just completed it without pullbacks, without retracement from the 30-minute candle chart. But if you pull back to the 5 minutes, you find it very hard for that to happen. And you need the breakdown of all of those price for entries and exits is important. So price most of the times do not just successfully complete a sequence or an objective without meeting some pullbacks, meeting some retracement or some difficulties along its transactional level. Let me use a practical example. Just for instance, you are traveling from Abuja to Lagos, right? In the process, that's by road. In the process of this transacting, you might encounter some obstacles on the way. It could be a checkpoint, it could be a flat tire, it could be something that would obstruct you. So this is also applicable to the financial market. There are hindrances that in the financial market can obstruct the complete or the successful transaction in price. All right, and we will learn how to locate all of those potholes and all of those obstructions and use them to our own advantage. It is important. So that's where we're headed. All right. So once we understand that has happened, we would know when and how to exit. Now look at this. Now this is called price correction triggered by the unsuccessful completion of large quarter point from 1.4500 to 1.4750. That is, you saw that price was moving from 1.37, that's 1.400. It began right here, transiting to this above level, 1.750, but there was pullbacks. And it's important I mention this. Each price corrections leads to what? Price reversing to where it began. For instance, look at we had a downtrend all of this area, and then price was moving from here, and its major objective was from here to this level, and its price had an objective of from moving from here to here, right? But then there was an obstruction right at this level. That's this level. There was an obstruction right at this level. Due to that obstruction right at that level, what price went back to where it began, right here, and what before. Now, what this means is each price corrections, most of the times, majorly leads towards price correction back to where it began. All right, back to where it began is important. Now, let's look at the vital areas that price can have some pullbacks, some rejections, and some major levels in it. So we call those areas. The next concept I want to introduce, that is, we're looking at now analyzing price behavior at large quarter point. So remember that these levels are the point from here and to this large quarter point, and then from here to here is another large quarter point, right? And then from here also to the next is another large quarter point. So let's analyze price behavior from each large quarter point to the next large quarter point. This is the current large quarter point. So I am not going to use this for instance. Let's use this particular area of price. Or let me use this particular area of price. I think I want to look for area where price has successfully completed its movement. All right, let's use this area as for instance. Now here, price has fully completed its movement. All right. So for that reason, let's use all of these areas for what? For instance, or to lay our base or background. Analyzing price, you want to put this down. These are powerful information you use to analyze and organize your trading age. This is technical analysis. It is a powerful information you use to analyze a technical age. Now, the quarters theory recognizes that the direction of each large quarter price move from one large quarter point to another and the completion of a large quarter point are dependent on the success or failure of the large quarter transaction. Now, what this means is this: for the next large quarter point to be able to complete its large quarter point, it has to fully accept the pattern from the previous large quarter point. Remember when we talked about overshoot? I don't know if you've come across the recording video on overshoot and undershoot, right? Where we discuss level of price that we can tag as successful completion of price movement. If you've not seen that, I will recommend you go back on it so you can understand deeply what we're explaining at this particular phase. Now, before this 250 level, we will even stand a chance to run the race. It has to the price has to come there. That is what I'm trying to explain. If price does not come there, does not have a chance to even take the baton, it's just like you're running a marathon. You're running a race, and then it involves exchange of baton. For you to even stand a chance to start running, to start moving, you have to wait for your partner to get the baton across to you. So with the baton, then you continue the race. Now, this is what it means here. For price to continue from this 250 level, price has to complete the 8,000 level. So for price to complete 8,000 level simply means it has fully moved from all of this angle, just in this case, and fully entered the overshoot level. I'll explain the overshoot level. If you don't understand yet, go back to that training video on overshoot. All right. So, but each failure will not get price to this level. That is, each failure will lead back to what? To price retexting back to where it began. Like I mentioned before, I said each failure of price or each failure in price in the bid to complete a large quarter point could lead price back to where it began. So let's take, for instance, that there was a failure in price along this level, price moving from here and moving from here, and then probably there was a failure around this level. What price will do is it will reject back to either a zone, either a level. I will introduce those levels now to you, either a levels or back to where it all began. So there won't be a chance for price to even get here for the other level of price to continue the rate. So each large quarter point is solely dependent. Each large quarter point completion is solely dependent on what? On the previous large quarter point's ability to complete its own what? Bargain of price transaction. If you still don't understand this, you can drop your question on the chat. I would explain better. Now, the large quarter point serves as constant and reliable support and resistance levels, right? The large quarter transaction cannot occur unless the support or the resistance of a large quarter point is broken. So when we start analyzing price behavior in large quarter point, you would understand those important price levels that price could come to and reject. And then when price fails or has the inability to break above or below those important reliable support and resistance, it will be impossible for price to take the next large quarter point. All right, so it's just a normal introductions, like you are, let me say you're jumping up on something. How do I put this? Oops. Okay, let's say you're climbing a stair, and if you lack strength to climb the next stair, you'll not be able to get to the next stair, and you'll not be able to get to the next stair, and then to get to the required or the objective floor you wish to get to, right? So this is also how it is in price. If price fails to, or if price lacks strength or ability to break the first floor it will not be able to retest the next floor or to see the next floor. All right. So price has to pull a lot of strength to break the first difficult level in price to be able to get to the next and break the next, be able to get to the next, break the next, and be able to complete large quarter point transaction. All right. So it is all dependent on the strength of price to be able to break all of those important price levels. Is important. Then the failure of an attempt for a breakout above or below a large quarter point is usually the first sign of an unsuccessful large quarter point transaction. Unsuccessful large quarter transactions are an indications that the currency exchange rate is likely to remain in the current large quarter when price moves higher and manage to complete a large quarter but encounters resistance at the large quarter. Now, any failure from price, I've explained this. I don't know if we're all getting my explanation from this, but if you're not, I could come back on it. You could drop me a message. You could drop on the different platforms you are on. I would reach out to them and then explain them deeply, personalized for you. So, looking at price, analyzing price behavior at large quarter point, we get to introduce one. Write this first rule. Put them down somewhere. The first rule is called the sign of strength, price sustaining at or above a large quarter point. Sign of strength. Rule 1. Remember, we're trying to analyze price behavior along a large quarter point. Remember that if a large quarter point is not successfully completed, we cannot have the next successful large quarter completion. So we always need price to complete a circle or to complete its objective to be able to hand the baton over to the next 250 price or over to the next large quarter point to continue the race either above or below area in price. So if price fails to do that, if price fails to hand over, it will lead to what? Either rejection or price staying at where it is or where it was at that moment. That could lead to consolidation, price going up and down, or could lead to total retracement back to its base. So, on that note, we have the first rule, which is called the sign of strength. Now, this sign of strength means what? Price sustaining at or above a large quarter point. Now, open your ears and listen to this. This is the type of price behavior indicative of the unwillingness of the market to see price continuing to decline, diminishing the likelihood of a breakout below the support of a targeted large quarter point. Without a breakout below a large quarter point, there will be no large quarter transaction of the currency exchange rate into a new 250 pips range of another large quarter point below the current large quarter point. Transactions cost the exchange rate to remain within the large quarter point normally lead to a bullish price move in an attempt to complete the current large quarter point from the bottom up by targeting the large quarter point above the large quarter point that was served as support. Now, what are we trying to explain? This works more for a downtrend. Now, sign of strength, price dropping. Price has an objective. So an objective of what? Of completing from this large quarter point to this. So this objective must be completed. But then price accelerating from all of these angles comes to a point and lacks the effort, the capacity, the strength to break support. Remember that when price is dropping, it encounters support, and support leads either to rejection above. All right. So when price encounters support, it is required of price to show innermost strength, to show enough strength to be able to break support, because support levels are rejection levels. They're not easily broken. So price will have to add extra force, just like a rocket, just like a spaceship, trying to break through the space, trying to break the force of gravity. It has to what? Incorporate enough energy, enough strength to be able to push it So if price comes to those levels and lacks strength, it will prevent price from further declining or from further dropping. And once price fails to drop any further, it will turn to what? It will lead to what? A reversal, which has what? Of course, hindered price successful completion to the next large quarter point. That is why it is called sign of strength. Price should have strength, meeting or encountering any support below its objective to be able to break it and continue further. But if price lacks those effrontery, if price lacks those fortitude, it is going to be very difficult for price to complete its objective. That's the first rule we introduce. And then I wish to employ some PDFs. Now, if you see this, price dropping, now we have here the unsuccessful large quarter transaction below 1.4250. This is 1.4250 here below here, right? Now, causes price to remain within the large quarter point, leading to a bullish price move that targets the large quarter point 1.54500. Successfully completed the large quarter point. Now, you know that price began right at this zone, targeting the next large quarter point, which is 4.250. Your distractions, I plead you mute yourself. James, we don't even have time. We have exhausted our time for this training section. But then let me summarize. So what we mean here is price has an objective here. Price is dropping. All of these lines are dropping price. So price is dropping from 4.250. You can see here, large quarter point LQE 4.500, and then this is 500, which is the large quarter. Price dropping from 500 towards what? Towards 4.250. Price is dropping. So 4.250 is a half of what? Is a quarter point 2. So its objective is to what? Is to complete this level in price and what? Hand over the baton to the next. So the next continues. But then price got to the undershoot area of 1.4275 and failed to break below it. That price lacked strength to break below it. And of being able to break below it, it went up back to where it began. The lack of strength causes exhaustion. The lack of strength in price causes exhaustion. Yes, we'll look at that. I've seen your question. You mentioned what are those signs of strength we could note to make us understand that price might rise or fall. We will introduce those levels that can reject price. All right. By the next section, we're running out of time already. We've run out of time already. So for our next section, but then go home with this. There is we introduce the first rule, which is called sign of strength. All right, and it is about price of failing to have enough capacity to break below price. So this is where we draw the curtain. On our next section, we will continue from right at this point. I would recommend you also to go back to the training videos, the previous training videos, and get yourself familiar with all of the price. If you have questions, drop it on the group chat. I would attend to them. Bye for now.